If you have a 9-to-5 job and you're pursuing trading, you need to listen to this video. What if I was to tell you that on this page right here, I've written this down, I've really thought about this. This is what I believe stands in the way of you making this a career and being able to break through and trade the capital that you want to trade, make the money that you want to make, and also replace that income from the job that you're working. So this is actually what I would do. If I started all over again and I had a job, this is what I would prioritize. And there are certain elements of, treat trading like a business. I'm sure you've heard that, but got no idea what that actually means. What I aim to do in this video, straight to the point, let's keep it nice and brief as to what is going to help you, so then you can fill out the missing gaps as to maybe things that you're not focusing on, maybe things that could help you out a lot. And then I want to talk about is swing trading versus intraday trading, because if you're someone who has thought about learning to trade but you don't know what strategy to trade, maybe you'll be under the false idea that you need to find something that fits your schedule or find something that fits your personality. One of the worst things that you could do, and I'll explain why. So let's start off. We'll actually start off with that, swing trading, intraday systems. The reason why I think you need both in your locker, is because you're not always going to have the same job, the same lifestyle. And if the only way that you ever learn, and I've ran into so many traders like this that I now help, is that they would have a system, and maybe it's like a scalping system, maybe it's a really lower time frame intraday system, and they're required to trade London session, New York session, and they kind of get into this routine, and sometimes it works for a good period and then it doesn't. And then maybe they move abroad, or maybe they get a different job, or maybe they have a kid, and as soon as their routine changes, it becomes really difficult for them to be able to perform. So then they find themselves in this rabbit hole of chasing that old time where they had like a short period of time. And I kind of think about it the same way like a gambler. So a gambler who's maybe risked some money on the horses or football, they've done an accumulator and they've made money once, or like a couple of times. And what they do is they chase that feeling of, yeah, but it happened once, so then I can do it again. Not realizing that the way they was doing it in the first place was always unsustainable. It was only going to be good in a lifestyle where there's like no distractions, no responsibility, no nothing. So what I aim you or educate you on is having something that is bulletproof and foolproof. Now, no matter what happens in your life, no matter how much busier that you get, you've got something in place to hedge against that. So let's get into that, shall we? So if you really want to make this a long-term trading career, your job. So you need to find a job that, not necessarily one that you like, ideally they are favorable for the most volatility in the market. So for example, if you're from UK or Europe, you at least want something that gives you a little bit of flexibility so you're not glued to the screen. So if you told me, Mark, I have a job and I start at say 7 a.m. and it's really restrictive, so there's no chance I can really ever look at my phone pretty much 90% of the day, and then I finish at 5, 6 p.m. Well, that's going to be a little bit tricky. I'm not saying you can't take trades out of that window, but you will miss out on a lot. If you can't ever even look at the market from London session and New York session, of course there's going to be some restrictions. The other side to that is that it's not all, lost hope for you, because you could be gravitating more to a swing style system that's end of day, and you might be setting trades overnight that go through the Asian session, and then when you get up before you go to work, you can manage those trades day to day. So you've got a hedge there. So then my question would be, the way that you learn to trade has to incorporate both of that. So it needs to be able to be a swing system and also an intraday system as both. We actually combine them. So there's certain scenarios in which that I would look to hold a trade for maybe 2 to 3 days, because I'm taking a slightly longer term trade. And I say longer term, this is not 3 months. This could mean 3 days, could be a week. But within that run, I can also benefit from the intraday movement. So I kind of get a bit of both. So see your swing style position as your background move. Have you ever been in a scenario in which that you've picked the direction and you've attempted to trade the lower time frame, you've traded the lower time frame, and even though it's moved in your direction, you've taken loss, maybe a win and a break even in there, but ultimately you've ended up like -2, -3, and it's still moved in that direction. What if I was to tell you, had you known how to hedge that by having a swing element to it as well, your background position could have made you 4%. So if you just got stopped out because it was super volatile in the lower time frames, but still committed to the higher time frame direction, you would have still been able to benefit. But you can't if the only thing that you've got in your locker is lower time frames. And if you're going too far into lower time frames, there's going to be more and more noise as you go lower and lower and lower. Now, some people say to me, Mark, well, I want to learn to trade where I understand absolutely everything. Well, this is the part that you need to figure out. If you can understand everything on every time frame and every single thing means something, it means it can be cracked, because then that means that we live in this perfect world where there is a justification for everything on every time frame. Well, doesn't that go against what probabilities is? Doesn't that go against the randomness of the market? Doesn't that go against the variable change that has always existed within the market? Sometimes there isn't a lesson. Sometimes there is just extremely volatile price action that doesn't mean anything. You can't tell me you're going to make sense of, like a 100 pip wick and go, yep, I understand exactly why it's done that. No, not everything means something. So sometimes it's about having a system to be able to learn when to walk away and then when to be aggressive. But that's a video for another day. So I do believe that if you're working a 9-to-5 job, you do need that, because there are going to be periods in your job in which that you take on more responsibility and you might find yourself in a position where you are a little bit more restricted. So having something in your locker in which that you can still benefit from positions. This is actually why I created H4 Mastery, because that kind of blends a bit of both. It's like an intraday time frame, but it's a higher time frame as well. So you're not glued to the screen. And if you do have a 9-to-5 job, and you find yourself missing a lot of trades, like almost impossible to miss loads of trades with H4, because sometimes you're waiting for 2 4-hour candles, which means it's an 8-hour window. You tell me you can't check your phone or your laptop within 8 hours. I'm sure you can. You've probably gone to work and come back by then. So you've got something there for that. But I didn't want to make this episode about strategy so much, but I thought I'd point that out because I do think it's something that people don't consider when they're working. They don't actually account for, well, what if you get into a different job? So you've got to be trading in a way that is agile, and you can adapt, and it can be nimble. If it's really, really restrictive, the moment you stop doing that thing or your lifestyle gets any more pressure at all, your results will go downhill. And I see it with so many traders. So don't fall into that trap. It's amateur hour. What do I want to talk to you about with trading? But treat trading like a business. The reason why you want to treat trading like a business, what it really means is just be serious. That's all it actually is. The benefit that you get learning to trade is that you don't have a whole bunch of risk, in the sense of you're not buying loads of stock, you don't have a premises, you don't have to go get all this different insurance. You've got I've written it down here. Like, as far as what I see, there's a few other variables, but you've got TradingView, right? Simple subscription. You've got your personal account that you might start off with a small amount. You've got of course, your job. So see your job as the vehicle. It's funding all of that, and it's funding you because you're the asset. And then as you become better, your banking on you will be good enough to be able to return. And then once you get more capital, it then pays you back. Very rare you can find like a setup of a business and go, right, let's plug and play this. Yes, use my money from my job, let's start this business without investing like 5-6K up front, where you don't have to do any of that. Low barrier to entry, especially when it comes to education and everything like that. So see it like this. You've got your TradingView, pay that for the year or have it on a monthly rolling, whatever you please. Then you've got your education. This is the technical part and the psychological part. So you investing into that, making sure that you actually have the correct education and you're not wasting 4 or 5 years trying to blend systems together and make no money and waste all of your time. Now you've got your funding. Now this can be your personal account and your actual funding assessments. So your job should be the funnel to all of that. So if you've got your TradingView, you've got your education, so you know you're on the right path and you can analyze everything. And whether you have a personal account or not, we can kind of put that to one side for now, because you can leverage the funding firms a lot quicker and then build that personal account up in the background. And then the rest of the money that you have per month, once you've proven to yourself with education that you know what you're doing and you've got some element of consistency, you can then use that money to allocate towards funding assessments. And then by doing that, you make money and then you scale up. You make money, you reinvest a little bit, you save some, you put a little bit into your personal account, and you just scale up accordingly. So what is the trap that most people fall into when they understand all of this and start to make that happen? So what you've probably seen online, which is someone will have 12,000 withdrawal from like FTMO, for example, and then have another 10,000, 8,000 here, and they've got accounts everywhere. They do all of that, yet 2 years will go by and they find themselves almost in the same position, or they've technically made these withdrawals and these payouts, but they've also failed a lot as well. So when you actually do the math, you'll find they're closer to break even than what the payouts would suggest, because they've spent so much to get there, because it's almost this like desperation of like funding without really working on the things that matter. So don't be so gun-ho about like every month, spending $400 on assessments and treating it like a lottery ticket, because it's just not going to work. Like the stats already show, like this is like 4 or 5 years of hardcore stats now. It doesn't work. Very, very small percentage of people will ever make it to a payout because, number one, I think they're ill-advised. They don't actually have the correct education. They think they have an edge, but they don't. And then they don't understand the other part of the edge, which is the psychological edge. And that's the part that people neglect the most. So they're probably trading a system that is very theory based. So it's all idealistic, but it's not realistic for you to perform. And then they lack the emotional composure to even perform that edge in the first place. So you can see why the stats are the way that they are. But I'm helping you not fall into that trap. But let's say you are one of the ones that you do have a system that's good, it's consistent, you know, it's really good through all market conditions, it's tested over 10 years, something that you can trust. You know, lots of people that have been trading it for that long and you can see a whole bunch of people making money from that system, and you can go, yes, great, perfect. Well, then what? What is going to be the key? This is the thorn in everyone, and this is where I see people, traders, get destroyed or not, and it is lifestyle inflation. So you imagine you're someone, maybe you come from, you know, a poor background, you grow up in a council estate, just like me, I grew up in a council estate, and maybe everything you've ever wanted is that nice car, or just to live a better lifestyle. And then you make that 10,000, 8,000, 20,000, and you finally see that money where maybe you make a year's salary in like 1 or 2 months. That's gonna send you through the roof. The chances that you are relaxed and composed and then go, like, you see that money withdraw into your bank account and you're going, yeah, let's go again, let's be smart with this. No chance. You are going to increase your life, and you will always struggle, and it will take you so much longer to get to where you want to be, because your life is just always going up in accordance to how much money that you're making. So then you're almost like the same person that, I'll give you an example. Let's say one person earns 30K and another person earns 50K. Let's say after everything, the person on 30K is left with, like, say, you know, £1,500 a month or something. And then the other person is left with £2,500 a month. You will find that the person who is on less money, if they have good habits, after they've paid for their bills and everything like that, and they're smart with their capital, they will end up with more money in the bank than the person who's on 50K. Now, they may clear more after tax, but how they spend it is going to be different. So when you look at it, like, and we've seen this with lottery winners, etc., it doesn't make sense, does it? Like, how can the person who's earning, say, 40,000 a year have the same amount of money, or if not more, in the bank than the person who's on 80,000 a year? It's because of lifestyle inflation. It's like the moment they make more money, their lifestyle increases rapidly with that. So if you don't fix it, you'll be someone who is making like 80 grand a year from the market, 100 grand a year from the market, but you still got no money in the bank, and you're the same. You're no better off than the guy trading a much smaller account, only making 30,000 a year from the market, because you have the same money left over at the end of the month. So unless you fix that part, so this is what you need to do. When that money starts to roll in and you start to do well, put money aside for funding to, you know, maybe acquire more accounts, more capital, or more money into your personal account, or investing into things that are going to help you grow. And then when you increase your lifestyle, do it ratio based. So don't just like, and just create your own reward system. That's all you need to do. And that could be something as simple as, let's say you make 10K in a month, £2,000 of that, you could treat yourself. The rest of it, just reinvest it back into everything that you're doing. But where people go wrong is they'll make that 10K and go, well, technically, that car that I want that's like £500 a month on finance, that nicer Audi, I've technically made all of the money for the whole year. So, you know, I'm gonna make another withdrawal, and it's that dopamine. So what do? They get that money, they put a deposit down to the new car, they've now upgraded their lifestyle, they're happy, they're like, guys, and they'll do a TikTok about it and tell you, keep going, guys, it's all worth it. It's like, you've not made it yet, you've got no idea what you're doing. And this is a way to self-justify poor financial decisions. So it's the lifestyle inflation. It's not your ability to learn to trade. I'm actually not worried about that anymore, because with the right education, I've seen, you know, in our, you know, education that we've got in Falcon, the success rate, because we've smoothed out the pathway year after year after year, I have seen the success rate get quicker and quicker and quicker, especially with our own fund that we've been running for 5 years. Like, the consistency is so much faster now because of our roadmap, our pathway, our infrastructure. So I'm not worried now about the failure or pass rate, because we've figured that out. What worries me is, no matter how good of a trader you get them, you know, technically and mentally, and they start making money, it's the lifestyle inflation that I can't interfere with. Like, I've got no say over that. If someone wants to make 20K and decide to make poor financial decisions, it's got nothing to do with me whatsoever, yet it affects so much of whether they're going to trade 7 figures in the future and really make this happen. A very small percentage of people that you see online that you get attracted to, and you see them driving the Lambo, the car, they might make 20 grand a month, but they spend 18. So it's a false representation of how a smart person who's ever made long-term success would live. Anyone doing that, you know that's not going to last, because a bad 6 months completely wipes them out. And you've seen that. You've seen the rise and the fall of lots of people because of that. So it's the lifestyle inflation. So it doesn't matter what strategy I teach you. It doesn't matter if I give you a swing strategy, intraday system, a scalping system. It doesn't matter what I give you. Even if I get you to win, if you don't overcome yourself and treat this like a business and go, this is my business plan. When I start making money, this is how much I'm going to allocate towards investing. This is how much I'm going to allocate to my personal account. If you can't think about that ahead of time, you're just going to get all this money and you're going to be as impulsive as you like, and then you'll just undo all of that hard work, ruin your confidence as well. So be smart with it, because I want you to win. I want you to prioritize a job that is going to give you the highest possible income that you can get in the smartest possible way, so then you can funnel all of that into your education, into your trading business that is going to produce you so much more money. So the only thing that's going to stand in the way is that when you make money, your lifestyle inflation. Can you live below your means even when you're making money and you've got all this money to do everything you've ever desired, just for a little bit longer? So delay that gratification longer than what the average person would, and then you will live a life bigger than what you could ever imagine. Bosh. Done dealio. Wake up.